This is Martin from Secrets, the channel for learning about trading and investing. Welcome to Quick Market Wrap Up for tomorrow, Wednesday, November 2nd. V is missing there, 2023 tomorrow. So let's just quickly analyze the charts and see what happened and how you can plan for the next day. Let's straight go to the charts first. That makes sense to wrap it up quickly. So here we have the breach of box channel and parallel channel and all that, and market had shown some support near a gap and a 200 exponential moving average, then started bouncing up, failed yesterday to overcome the resistance, and then started falling down. And today it's a more confirmation of the bearish attack, and then it's further sliding down. You have a wide range bearish candle that is formed here. Nifty sliding again another 0.5% down. Bank Nifty also, yesterday we had a resistance just below the 200 exponential moving average, and then today it was an expiry for the Bank Nifty, and it's an indecisive close. It did not slide as much. If that was also sliding down, it would have been devastating. It was only the Nifty that shed more points today. So if it still maintains the 200 exponential moving average, Bank Nifty is starting to get all of that and hit the resistance exactly that point and then move down. Seems like the market is heading further down to retest the 42,000 level of the Bank Nifty, and once again the 18,800. A good support comes into this zone because it's a confluence of a gap, a previous window gap, somewhere in the month of July, and along with that you have an exponential moving average, along with that you have a previous swing low. So all of this confluence, one of those gaps was breaches, the other day at 1874, where the previous swing low was made. So it's a confluence of 200 EMA gap and previous swing lows, and so that could act as support. Remember that we are already down 9% here in Bank Nifty and 7% here. So decent correction has happened. Probably it may retest that and then consolidate here, and then it takes its sweet time to move up further. Or it could break this 200 exponential moving average of the Nifty. So that would mean that you're really in the medium term bearishness is taken off completely. Right now the fight is happening. The up move, the reversal that was expected to happen didn't work out well, and heavy selling pressure is there. That's exactly what happened. So foreign institutions today also sold. Yesterday also sold. So it's 15-16 weeks since they're continuously selling. So yeah, so less than half a percent of slide down in DC Doji and all that, right? So levels of resistance is exactly here. Conquering the 200 exponential moving average will be the first thing that Bank Nifty will have to do, and after that the 50 and 100 and 20 and all that has to be confirmed before we can say that the reversal actually happened. It may climb back into this box, then we are in a safe zone. Until then, it is just making lower low and lower high in Bank Nifty. Nifty, right, made it in this 200 support and climbing above this exponential moving average at 19,500 level. So 19,300 to 500 you have huge resistance. Suppose 18,800. If that is breached, then you have next swing low at 18,650 and then 18,450. That's how it's downside. Bank Nifty similarly above 200 EMA 43,500 would be the first resistance to conquer. After that, closing above the 44,000 and 44,200 exponential moving averages, 50, 100, 20 and all that will be the next touch. Downside, the first support would be 42,000 rounding number, and then you have supports at 41,800, 41,650 and all, so that would be the breach. So if that is breached, if the 41,700 is breached, then you can see a big fall down that can happen, that can take it to the 40,000 nearby zone. So it's very crucial. So most likely the market will consolidate this zone. So any up move only after the 200 AM, at least the 200 exponential moving average is conquered on the daily charts. That's what we are. Otherwise, what happened in the market is all the major heavyweights, HDFC Bank, Reliance, ICICI Bank, Infi, TCS, all of them fell except the Reliance, which shows some tick, less than 0.5% of uptick. So it was holding the market from big fall. Otherwise, all are near to 1% kind of big fall has happened in the Infi, TCS and Kodak banks. HDFC Bank didn't fall too much, neither did ICICI Bank. So Bank Nifty had an expiry today, did not fall too much, otherwise it would have been a bigger fall. right? So that's exactly what has happened. So if you look at the indices, you can see that all of them except the pharma and realty have shown green. All other sectors, IT, metal, auto, FMCG, all of them have fallen less than 0.5%, and metal fall more than 1%, right? So you have some divergence. This maintains the bullishness still from the RSI momentum perspective. We have a divergence which is bullish in nature. That's in the auto and the FMCG. Only two main. Oh, FMCG is gone today. Realty. So auto and realty. Realty is also having a divergence, bullish in nature. So very close to the all-time high. Absolutely bullish in spite of all this fall. So two sectors to bang on. That's currently holding the market is the auto and realty sector. Rest is all in the sideways or bearish zones. Mostly sideways zones in the medium-term perspective. Right. So today shows, if you see, it's a pharma and reality that alone shows green, others are fallen white. Global markets around. So overall, if you can, before getting the global market, overall we have a weak chart, right? So Nifty has close to maintain the 90,000, right? 90 points down, 0.5%. 90,000 is a very key figure which has lost. And Nifty 43,000 was a key figure that also it's lost. It's a rounding figure, key in the sense that rounding number is lost. So there is high possibility that it can retest the previous swing low. That's the first thing. Tomorrow's a weekly expiry for the Nifty. So we already seen the levels for the Nifty, right? So we have to watch out would be whether the 18,800 is breaching or not, or 18,800 is a confluence of exponential moving average and gaps and previous swing lows and all that, right? Probably it will retest, so that would mean maximum 200 points of move is what is expected. So 18,800 would between 18,800 and probably 80, no, 19,100, 200 maybe the max. So 200 points the other side, 200 points on downside. So between 19,200 and 18,800 is where we have to place your bet on expiry day, right? So that's how it is. And otherwise, charts are weak. VIX has finally climbed above and closed above the 12 after a long time. Across the sector selling. Operators PCR is turned bearish, actually 0.6 or something. So it's not any long looking great. So tomorrow it shows huge resistance near the 19,200, 19,000, 19,100 and all that. Right? Supports highest called put writing is seen at 18,800. So we had a bang on. This may change tomorrow morning, moves up. So yeah, overall bearish view is there. Right. So this is an opportunity for the investors if you know to put in SIPs in quality stocks. So if there is a dip that is happening once again, and the retest 18,800 will be an opportunity to buy in, another SIP on quality stocks. Traders has to be cautious. Short coverings and long windings can happen anytime. It can take you for a ride. So have tight stop loss and hedge positions, and then play it safe and cut short positions as if this VIX is focus spiking towards the 20, 15 plus and all that's danger. So cut short as it moves up VIX. Yeah, so that's all I have for the day. So if you're not subscribed, subscribe and share difference. Right? Happy trading, happy learning, happy investing. Bye bye.